Hi, it's Grant from Tax Guru and Lightyear Docs. I've been involved in tax since 1982 when I first started and got my passion for tax, believe it or not. That led to self-managed super fund, family wealth protection, and now with Tax Guru, we're right back where we started. But for as long as I can remember, negative gearing has been around for a long time. And essentially, what is negative gearing? Well, it's looking at an asset and borrowing money to acquire that asset. If it's an income-producing asset, so for example, if it's a family home, you can't negatively gear that. But if it's an income-producing asset, then essentially what will happen is the costs we bear in relation to interest costs are tax deductible. So when we're borrowing at like 5, 6 or 7% currently to buy a rental property that only has a 2% yield, which means a 2% return or 3%, then effectively we are negative gearing. That means our interest expense is greater than our income return, which means we end up with a tax loss. Compare that to, for example, industrial property, which might be returning 9%, but we're borrowing at 6%, so that's not negative gearing, that's what we call positive gearing, obviously. So with that one, those tax losses can then be offset against salary, wages, business income, trust income, and essentially what we're doing is we're getting the government to help give us a bit of a run up in terms of acquiring that property. Many people have negatively geared, 5, 10, 15, 20 properties, and I see it all the time. One of the issues I always raise anyway is that when you turn 65, you're relying on those properties, there's no gearing anymore, rental income is fully accessible, plus you've got this huge capital gain. With the new capital gains tax rules, who knows what's going to happen. My preference is always negative gearing in a self-managed super fund, but that's a completely different story. One of the things the government tried in the late 80s was to knock out negative gearing, that the tax loss can only be offset against future income or income from other properties. Now the problem about that, suddenly the stock of investment properties, everyone started selling them. So that's one of the things we have to watch out for in terms of the government looking at reducing negative gearing or minimising the number of negative gearing properties. Again, is it going to apply to someone who's already got like 4 or 5? Does it mean that suddenly overnight it's all locked out? Is there a transitional period up to like, 1st of July 2027 or 2028, or is it simply grandfathered, so it's only going to be from that time onwards? Each one of those has a completely different impact. If they're looking at releasing stock in the market for first home buyers or individuals, that's going to be good, but the reverse is that if you're taking all that investment stock off the market, rental prices are going to absolutely skyrocket, which is exactly what happened last time when they had to peel back that negative gearing because rental got out of hand. In my feeling, it's probably going to do the same again. So we'll see what happens on the 12th of May, but more importantly from the 13th of May onwards, I'll be doing a whole lot of explainer videos on how it may impact. And remember, we're not just looking at borrowing in terms of property. Is it going to also apply to shares and also crypto as well? So we're going to have a look at all of those ones, but the devil is in the detail, and long-term ramifications, particularly when we've got Iran, US/Israel war, is now even, puts another complexion on everything. Grant Abbott, signing off.